Welcome to the B.F. Anderson Technical Report for January the 7th. Been an interesting couple of weeks here, especially this week. A lot going on. Let's look at the charts real quick just to get a handle on things. Here, as you can see, the NASDAQ is continuing to stay above the upper moving average. We have seen somewhat of a little bit of a pullback in here. Not too much to be concerned about. We are still positive on the NASDAQ on a short-term basis. This is the indicator where we use the 35-week moving average. As you can see, that indicator continues to stay constructive as long as it stays above the 35-week and the line is in a positive trend. Okay, here we have our New York high-low index where we're measuring net new highs. Now, I've got this as a 10-day moving average here. You can see a nice pop-up. Also on the histogram, you can also see a tremendous amount of net new highs as the New York Stock Exchange has hit a new high. Very constructive. Now, new lows, no problem whatsoever. As long as we stay below 40 new lows a day, everything's smooth. This is what we call the leaking boat indicator, which basically says that if the market is in a topping process and you're starting to get a lot of new lows, it's time to be cautious. But we don't have that situation. Okay, here we have the golden crosses, which is where we take the 10-month moving average versus the 20-month moving average. This is the S&P 500, which continues to be on a golden cross, meaning bull market. Here we have the NASDAQ, same thing, golden cross, and it continues to confirm a bull market in the NASDAQ. China actually hit an all-time new high here on this particular ETF. On this particular golden cross, you can see here how we're starting to get more white space. So it means that the particular instrument or security is moving up much quicker and is in a rapid ascend. Okay, here we have the aggression index on a daily basis where we take the 50-day moving average, and you can see, we did get a, somewhat of a peak in the aggression index, which is where we basically comparing technology stocks to consumer staples. And you can see a little bit of a pullback here. However, if we look at it on a weekly basis, which this is the indicator where we take the 40-week moving average compared to the ratio, as long as the ratio stays above that particular moving average, we're in good shape. Here are the three economic indicators that we look at. This is the 10-year Treasury note. I mentioned last week that a move above 1% could be meaningful, and sure enough, we got above 1% a couple days ago. Then you also notice here that the price of oil is pushing $50. It actually broke through 50, but today closed at $49.93. So it's basically breaking out. The financial stocks, with interest rates moving up, that increases their profit margin. Therefore, you're seeing a nice up move in the financials. Okay, on the S&P 500 on a daily basis, using the 25 and 50-day moving average, very constructive. Also on the 200-day moving average, we continue to stay above the 200-day, and the actual S&P 500 is really looking in a nice solid uptrend. This is a bull market. Now on fear and greed. Now today I wanted to mention I brought today with me Amy, my daughter, who is a millennial. So we're going to have a session here from time to time where we talk to the millennial. But Amy's had a lot of experience. Amy, how many years have you been in our industry now?
I'd say about 11 years.
11 years. Now, Amy went to work for a firm in Tacoma, Washington, where their primary objective was to sell...
Basically fear, bond marketing during times when people want to move to what they think is safe options versus equity.
So in other words, the fear and greed thing is really a big deal. In other words, as Buffett says, be greedy when others are fearful, and be greedy when others are fearful, and fearful when others are greedy. So I got to keep that straight. But right now we are in kind of a dangerous area here. We've got a lot of optimism, but as we all know, this can last for quite a while. Here's the volatility index, continues to look constructive. We're below 30. Actually started to really get down around 20 earlier in the month, but we're looking fine there. So, volatility is down. Here we have, I wanted to now get into some miscellaneous charts that we just kind of look at. This is the S&P 400, which is the mid-cap stocks. These are not the large companies. And look at the breakout there. This is very constructive. Here are the small cap stocks. Look at this, a major breakout in the small caps. This is basically saying that people are willing to take risks on the smaller companies. Now, here we have the cumulative advanced decline line. This is where we're measuring advances on the New York Stock Exchange versus declines. I went back to the low on March 23rd, and as you can see, this has been in a very interesting uptrend. I'm comparing it to the 200-day moving average. Looks very positive. Now, this is a graph on an ETF that I wanted to talk a little bit about. This is a graph on lithium. Now, I am of the opinion that the future energy out there for transportation will be the sun, which means solar. So solar works because you have battery technology, and so lithium goes into the batteries is the a particular metal that is the most efficient for battery production. So Amy, as a millennial, how do you feel about the electric car revolution?
Well, I think this is something that's been a long time coming, and I'm glad that the stock market is finally showing that electric vehicles and battery technology and lithium is the clean energy direction that we all should be going towards.
What about the cool factor?
I think it's real cool.
Okay, now also, we talked a little bit about fear and greed, and as I mentioned, Amy was actually working for a firm that, something that happens in our industry that we all need to be aware of is that it's really easy to sell fear, but it's difficult to sell hope. Right. And so what happens is with these emotions that we all have, when you're really fearful, that's probably when you really ought to be thinking about stepping up to the plate. However, when you're greedy, that's probably when you ought to be backing off. Now, what I've got here is a graph of the QQQ, which is the top 100 technology stocks, versus bonds. So what happens is that for years, because of fear, people have been putting most of their money in bond funds or CDs or fixed income assets. Well, this is starting to switch. You can see here that this ratio, as long as this particular ratio moves upward, it means that these technology stocks are doing substantially better than the bonds. So what's happening here is you got to realize the bond market is substantially larger than the stock market. So as money moves out of bonds into stocks, it's a lot of money. So let's look at another example. Here's the S&P 500 compared to bonds. Same thing. Actually broke out. The ratio broke out and hit a new high today. This is a graph of just the bond fund. This is the TLT, which is a 20-year Treasury bond fund. Pretty generic. But look at what's happening here. This bond fund has broken below the 200-day moving average, tried to stabilize, and is now breaking down again. Remember, as interest rates go higher, the value of bond funds go down, or bonds go down. So I think what's happening here is we're starting to see maybe an increase in interest rates. I think the bank stocks are pretty much discounting that. Now let's get into the top 5. Amy, what do you think of this one as a millennial? This is Tapestry.
Well, of course, I'm a millennial and I'm a lady, and so I love my Coach purses. Tapestry is an $8 billion company, and they own Coach purses, and this is something that is not going anywhere anytime soon, and their online e-commerce is the future as far as luxury products go.
Well, also, we've talked in the past about the spending patterns of the millennials. If you really think about it, as you get older, your spending patterns change. As you're a young person, you really spend a lot of money, just getting established. Well, young people like consumption, and purses is one of them. Now, this is Albemarle. Let me mention here on Albemarle quickly. Albemarle is the world's largest producer of lithium. Now, you can see here the stock has broken out to an all-time new high. It broke out here initially on the initial buy signal and has been following that 10-day religiously, and then broke out here in the last 2 days in a big way. Now, what's happening here is, in my opinion, all the automobile manufacturers are moving towards electric cars. Volkswagen has already announced their IE4, which is a pretty nice looking car. China has 3 car manufacturers that do electric, actually 4. One of them is owned by Berkshire Hathaway, which is Warren Buffett. It's called BYD. Now, Albemarle is the world's largest producer of lithium. They primarily produce their lithium out of Australia, and then it's what they call rock lithium. It comes out of a quarry, which is the favored type of lithium because it's easy to process. Now, Albemarle also has an area near Piedmont, Georgia, which is near Charlotte, North Carolina, where they have a place called Story Mountain, which is an abandoned lithium quarry. They're thinking about reopening in it because the demand for lithium has been so strong. So they are basically now no longer in the specialty chemical business. They are a metal producer. Now, this is a company called Celsius Holdings. Amy, what do you think about Celsius Holdings?
There's a lot of different energy drinks out there. This is one that kind of came to our attention because it uses all natural products, but it also uses sucralose, which helps with people that have restrictive sugar intake diets. So it's a definite better option than, say, Red Bull or some of the others.
Well, I've actually purchased the product, and I must say it's exceptionally good. We're trying to all get off soft drinks, and just drinking water all the time just really doesn't work for me. But this company's interesting. They're out of Boca Raton, Florida. Okay, Freeport-McMoRan. Let me mention this. Now, this company is copper. Now, we own this stock, and the reason we own it is that if you look at an electric cars use 3 times as much copper in the manufacturing process as gas cars. Plus, you got all these charging stations that are going to be going in all over the place. In fact, Volkswagen on their webpage mentions a company they own called Electrify America, which is claiming they're going to be able to build charging stations just about on every block where there used to be a gas station. So that's going to require a lot of copper. So mainly it would be lithium and copper would be the 2 metals that I think are going to benefit from this cycle. All right, here's Grow Generation. Amy, what do you think about Grow Generation?
Grow Generation has basically it's a farm supply company that is here to help with magic gardens. And if you don't know what that is, yes, it is marijuana. They're involved in the lighting, the ventilation, the soil, everything to help, states that have legal rights to sell and produce marijuana have their own operations. And they're doing a really great job. They currently just have 36 stores right now in their franchise, but they're growing rapidly.
Do you think maybe there's a political twist here?
I do think if we see more blue across the board, there might be a little bit more freedom on the marijuana side as far as getting decriminalization and adding it more to the business structure of our country.
It seems to be coming. Okay, that's it. So if you have any questions, please give me a call. Thank you very much.